So I have drank the Kool-Aid the last couple weeks and started investing, if that's what you want to call it, in Yieldmax ETFs, specifically ULTY, which is an ultra high, I'm going to call it dividend, but that's wrong, distribution ETF that currently pays year on year 86.93%. You heard that right, 86% dividend rate. And on top of that, it pays out weekly about 10 cents of that 86.93%. So, what the heck is this thing? I know a lot of you guys have never heard about an ETF or a normal stock or anything that pays out this high. So, uh, Utility is an actively managed ETF fund that seeks to generate weekly income from a portfolio of covered call strategies uh, of US listed stocks. So, what's a covered call strategy? Basically, it's I own 100 shares of the stock. I sell a call at a premium. I collect that premium. If the strike price is reached from what I sold it at, my shares go bye-bye, and I collect not only the premium, but a profit, if there is one, of the underlying. Now, the problem with this is your earnings are capped. Secondary problem is you might not even reach that, what's its name? That covered call top. You might not get there. In fact, your security, whatever it may be, might fall and, in fact, never reach whatever your strike price is. And at some point, it goes so far away from what you're selling it against or what you bought it from that selling a covered call is no longer feasible. At which point you switch out probably to a protective put and hope that works out for you. And this is the exact strategy that these guys are using. So, what they do, or how long the fund's been around, and how many assets they have. Currently, the fund's in inception since 2024, specifically in February 28th. Was it a leap year that year? I don't know. They have net assets of 3.06 billion. The current price, I think, as of yesterday, this is listed because it's not updated yet, was $6.03. There are 507,875,000 shares currently. That number goes up every week, by the way, because we all buy back into the fund with our distributions that come from actually owning the stock, the 10 cents that I was talking about before. Uh, Closing price from yesterday was 604, and then I don't know what a median day spread is. I have to admit that one is a no-no for me. They have a gross expense ratio 1.4%, which I've been told is actually quite high for ETFs. So these guys are raking it, it seems. But yes, what do the distributions actually look like? Well, last week I made a shiny 10 cents, and I currently own, I think it's about 60 shares of 60.8, something like that. So I made a whopping $6, which were then reinvested and bought me almost one share, or yeah, almost exactly one share of the underlying. And I have owned this since down here 07/07/2025. So I have received 9 cents, 9.6 cents, 10.35 cents, 10.29 cents, 10.08 cents. So I have made about 30, 48, $49 on this. And I bought the underlying at 624. So I'm down a little bit from what I bought it for. But I'm still up on the other end from the or from the distributions. Let's not call them dividends. I'll explain why we shouldn't call them dividends. Really quick, over here, it's this statement. The most recent distribution on 08/08/25 contains 40% 0.76 return of capital and 59.24% income. What is return of capital? Return of capital is your own money coming back to you. The income that they generated uh, is 60% of what comes back to you within this 10 cents. So let's just say 4 cents is the money you already invested, and 6 cents is new income that is put back into your hand that you then put back into the fund, which then grows the fund. Now, this to me sounded a bit like a Ponzi scheme, if you know what I mean. That when I first heard about it, that new investors pay for the returns of older investors. But here it looks like the more money that gets generated by what? By creating covered calls and selling protected puts on underlyings makes you X amount of dollars, but the price, this comes at a cost, of course. The price of what's its name? The actual underlying here actually decreases. Because if I go to, we won't get it here. You know, guys, sometimes it's just not that easy. ULTY. That's the way it looks, and that chart don't look good, baby. Actually, it's only been around for a year, but yeah, 5-year chart's fine. So it has gone from inception, which was around 20, to the low, which was in April. Of course, we know why, because of Freedom Tariff Day, to 545. It has gone back up to 620, $6, somewhere around this, but it hasn't been great. But Market Chameleon, which is a great site actually, can tell me that it has had about $13 and what is it, 70 cents worth of distributions since its inception. So if I in fact add $6, which it's currently at, and whatever this is, 13. So that means the total price of payout, $20. So that means, yeah, if I had invested since the beginning and I had not reinvested into the actual underlying, I would still be out what, about 30 cents, which I guess would be covered in the next 3 weeks. So I would be at break even at that point. But I'm sure, I don't have the math on me, but I'm sure it's the case that if I did do reinvestment, that I would already be at break even a long time ago, way earlier than now. Now, what exactly are they using for covered calls and these cash secured puts? What are the underlyings, basically? So, Affirm Holdings, Applied Materials, AppLovin, and I can get the full list if I just click down here, and that puts me up this wonderful sheet. which is not fitting on the screen, but that's okay. So, firm applied materials. I have absolutely no clue what BMNR is. Weeble, Coiny, or Coin I see in there. Robinhood, Mara. So what do these things have in common? PLTR, that's great. Reddit, blah, blah, blah. SMCI, so Supermicro Computer in there, New Scale, Unity Software, Upstart Holdings, and a lot of cash. Ooh, that's a big amount of cash there. What do these things have in common? They're extremely volatile stocks. They go up and down like, well, like some people's pants. Won't say who. I'll leave that up to you guys. But yeah, these stocks are up and down like crazy. So if you do end up putting a covered call or a collar, as they say, on these, you might get bought out, or it might just go through the floor, which might be a lot of reason why the what's its name? Why the actual ticker symbol ULTY is so volatile. And which is why, in fact, they warn here that investing in the fund involves a high degree of risk. Yeah, you ain't shitting me. Due to ULTY's investment strategy, ULTY's indirect exposure to gains, if any, of the share price returns of the underlying securities is capped, like with all covered call strategies. However, ULTY is subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by income received by ULTY, meaning your protective put actually might not exist because there's no guarantee that they actually put it on there necessarily. Or even if it does, it might blow through the floor. The protective put kicks in, but then they end up selling the protective put, buying the protective put. Now I'm lost. They might end up selling the protective put, but then it crashes even more, and you're still holding on to the underlying, which is now even more down in value. Uh, yeah, so it might become a bit of a mess, and it might also explain why exactly the fund is down in a year from 20 to 6. Not only the fact that they're paying you out your own money a little bit, but also that these things are extremely volatile, and yeah, you might not make your money back. I can say for myself that I made about $8, to tell you the truth. Which, okay, fine. I'm just dipping my toe in. I'm just having some fun. I'm not trying to do anything serious here. I'm just kind of seeing what this whole thing is about. But, you know, $8 is $8. I don't particularly care. As long as I'm on the positive side of the trade, what's the problem? Anyway, these are just my thoughts on what's its name on ULTY. These are not in any way affiliated with Yieldmax, nor in any way are they financial advice. I should have mentioned this within the first 30 seconds of the video, and I did not, and I apologize for that. But I am not recommending that you end up buying this. In fact, I would say if you already have it, yeah, do your own thing. If you know what I mean. Don't don't listen to me. I'm just some rando stupid guy on YouTube. who is just trying to live a life and get by and find the comfort of a good woman.
Number one, stay away from women.
Okay, guys. I think I'm gonna end the video there. I'd ask you to like and subscribe, but if you've gotten to this point all the way here at the end of the video, you probably already have. If you haven't, please do anyway. Uh, it's my first video, and it would be nice to see a big thumbs up from at least one person out there who, had the kindness to actually, you know, give that like or that subscribe. Thanks a lot, guys. Cheers.